Good afternoon, good evening, good morning, folks. Thank you all for joining us for Conversations with Cobb. We're on episode 2 here, and we're going to be talking today on using your cryptocurrency for foreign investments. We have a jam-packed session for you all today, but before we get started, for folks that are familiar with using Zoom, go ahead and find that Q&A section and let us know what part of the world you're coming in from today. For folks that may be new to Zoom, you may be prompted to update, but you should be able to find that taskbar on the top of your Zoom with the Q&A section. Let's see where some folks are joining us from around the world today. We have quite a bit of folks registered on the line. All righty, we have Anthony joining us from California. Welcome, Anthony. All right, I see more folks are joining in now. Nathaniel, thank you for joining us from upstate New York. Awesome. Well, as more and more folks are getting signed on here, we'll pass on the mic quickly to our CEO, Mike Cobb, here at ECI Development. Mike, the floor is yours, sir.
Very good. Thank you, Michael. Well, welcome everybody to Conversations with Cobb. We're putting together some really interesting folks, and I hope tonight you will enjoy hearing from two Johns. We have John Morrison from BitPay with us, and then John Wingate from BankSocial. I'll be doing a more formal introduction of both of them a little bit later here in the program. But what I'd like to do now is just sort of get started, because tonight we're going to talk about something that's very, very important to a lot of folks, and that is, how do you use your crypto to either purchase assets, make investments, or use those crypto assets to leverage them, to borrow against them, to make that same kind of investment. And that's really what we're going to talk about today. We're going to talk a little bit about what's going on in some of the communities, some of the very special communities that are out there now for folks who are crypto oriented. In fact, I just got back from Prague, Czechoslovakia. I was in, or the Czech Republic, I guess. I was there for the Free Cities Foundation meeting, and I was invited to go speak there. And a lot of folks very, very excited about what's happening in the Free Cities movement, but also tying that into what's happening in crypto. And if at the end, if I get a little extra time, I'd like to share a little bit more about what happened there, what's really on the cutting edge with some neat cities, free cities and free city movements around the world, and how that's impacting what we do in the crypto sphere as well. But for now, let me just go ahead and just click in. We're going to jump into a couple elements of the presentation. Michael Fuller, for some reason, I'm not able to change screens, so I'm not sure if I have control back, if you'll make sure I get that. And there we go. Thank you.
There you go.
Well, maybe not. You might have to advance them for me.
All righty, let me jump over here. There we go.
All right. So so we have John Morrison with us, and he's with BitPay. Again, we'll do a little more formal introduction later. John Wingate's going to be joining us from BankSocial. We talk about emerging markets and where we might want to make investments. Just wrote a recent article about a time machine investment. We'll talk about that, some of the emerging markets, and some of the neat ways that you can get involved. Obviously, BitPay is a transactional company. They can help us make those transactions. We talked about leveraging our transactions with the crypto loans. And then we'll talk a little bit about some of the communities and some of the investment options available to folks today as well. The time machine concept's a powerful one. The ability to go back in time, if we had it, right? To be able to go back in time and make an investment 10 years ago, right? And if we could do that, I think we'd all come back a lot wealthier, wouldn't we? We'd go back in time, we'd buy Apple stock or Google or Microsoft if we went back far enough, or whatever it might be, right? But this idea of an emerging market is kind of like a time machine, right? We can look at an emerging market, countries say like Nicaragua, even Costa Rica, Belize, countries that are moving along this development path. And when we do that, we're kind of putting ourselves in the position of riding in a time machine. And so a country like Mexico, certain parts of Mexico, Cancun, Cabo San Lucas up the top right, very, very popular, right? People go there on vacation. People take their honeymoons there. Countries like El Salvador, Honduras, Nicaragua on the bottom left, not very popular, not a lot of honeymooners. And these things have economic consequences, right? The pricing of property is certainly a big impact. Popular areas, more expensive real estate, less popular, a better value proposition, cash flow, rentals, all of these things are interrelated. And we'll talk more about this later, but this is really what we have in front of us when we look at the developing world. We have the opportunity to go back in time and put ourselves in front of the path of progress. And if you're in crypto, chances are you've done that. You've put yourself in the path of progress. Some of us many years ago, getting in very, very early, some of us later, right? But we understand why crypto is happening. We understand the big picture, and we're putting ourselves in front of that monetary path of progress, the crypto path of progress. So we already understand that. That is a time machine of sorts, and we're all in really early on that. The same thing is true with real estate investments and other investments, right? If we can put ourselves in the path of progress, we can benefit much in the same way that getting in early on crypto has done for us. Again, this idea of getting in early, right? I mean, California, home on the beach, $1 million to $10 million for a small property that looks at the ocean, $3 to $10 million in the Bahamas, again, for an oceanfront property. But when you compare that to a property, say in Nicaragua or Belize, the numbers are 1/10 the number. I mean, it's just staggering what the value proposition is when you go overseas. I really wish I had control, Michael. There we go. Thank you. Anyway, but let's just keep going here. We've been in business for 26 years as a company, and we started taking crypto 5 years ago. And it says we've taken about 2.1 in crypto. That's true on homes and physical properties, but we've taken additional $3 million, over $3 million in crypto for teak investments. And we will talk about the teak investments, but you can see 44 individual homes out of about 200 homes. So about 25% of the homes that we have sold and were purchased at Grand Pacifica were done with crypto, 25%. So it's a very large percentage of the folks now using crypto as that asset they choose to own additional new assets like real estate. The last thing I would mention here before we jump in and introduce John Morrison is the ability to build a community, right? As crypto, I mean, I noticed this when I speak at a lot of the crypto conferences. I was speaking at the Bitcoin conference in Miami a couple of years now, other crypto events. And one of the things I notice is just how excited people are to be around other people who share similar interests, similar focus, right? The excitement is incredible. And not just at the convention hall, you go down the block, 6 blocks, and there's a bar or a restaurant. It's on fire with a bunch of crypto people, a bunch of Bitcoin people, and they're just excited to be with other people. Well, this is an online community, and a few times a year, people can get together somewhere, whether it's Miami or Los Angeles or Argentina or El Salvador, right? It doesn't matter. I mean, like they get together, and it's exciting, right? Because we can be together with people we enjoy being around. Well, Mike Peterson, the godfather of Bitcoin in El Salvador, ask us to build a physical community on a piece of property he owns. That picture on the right, the town of El Zonte on the left, it overlooks the beach in the town of El Zonte, to build a physical community for folks who are in the Bitcoin space so that we can all be together. We can enjoy the company of one another in a beautiful resort community setting. And that's what Mike has asked us to do. And we're going to continue to do that. It's right there in El Zonte. In fact, if you would like to hear about this, if you want to be the first people to hear about the opportunity to own in El Zonte, in Gran Zonte, which is at Bitcoin Beach, scan the code, shoot us an email, it tees one up for you. We will make sure that you get to hear about the opportunity to own in the Bitcoin Village there in El Zonte. All right. So I think we'll skip some questions here because I want to get in and get John introduced and then really have this discussion more integrated at the end with the BitPay piece, the the financing piece, and then how it relates to ownership of real estate assets. John, really glad to have you with us. I'm just going to quickly read your bio here. You have worked in the payment processing for over 10 years, both as an individual contributor and regional director in the fraud prevention space before transitioning into cryptocurrency payment processing. Prior to BitPay, John, you worked with major fraud detection providers such as ACI Worldwide and Forder. We really, really appreciate you being with us here today. Fraud prevention, obviously on the compliance side of things, critically important in the crypto space as it is in any financial transaction. That wealth of experience really is critically important for what you do and what you're going to do for folks. And we're really happy to have you here. So John, welcome, and take it away.
Thanks, Mike. It's a real pleasure to be with you, and we appreciate the invite to be part of this conversation. Just to give you a brief overview of how BitPay fits into the equation. Unlike a lot of other cryptocurrency companies that you may be familiar with, BitPay is not an exchange. We're focused solely on merchant and business enablement to be able to participate in the crypto community. So we are actually the world's oldest and largest crypto payment processor. And so we've been around since 2011, which is really a kind of a lifetime, Mike, if you can imagine, in the crypto world.
It is.
We have we're up to about 100 employees now in the Atlanta Metroplex right now. We process about 1 billion in Bitcoin and blockchain transactions every year. We support now, we're up to almost 18 different cryptocurrencies that we support, including all of the major coins, all the major stable coins, and some new arrivals like Polygon, Cardano, Solana, Shiba Inu. But really, we're focused, our founders had a vision of being able to set up a different type of crypto company where we could actually enable businesses to avoid the risk that is normally associated with cryptocurrency and actually participate in the ecosystem, but not actually have to hold on to any cryptocurrency and deal with the various tax liabilities and complicated features of crypto, and really open themselves up to this huge community that's 300 million people strong worldwide. And the feedback has been very positive. We have some major clients in all different types of verticals, including some big ones on the apparel side, such as Gucci, Pacific Sunwear, Breitling, luxury goods, and apparel is very hot right now. But even something that's even more transactional, like AMC theaters, where you can buy movie tickets and concessions. But there has been, Mike, to your point, and kind of part of our partnership with ECI, has really been around the real estate market, and in real estate, property management, speculative investments, investment instruments. Crypto has been very, very popular, including not only in the United States, but very much in Latin America, and also in the Middle East too. So, we have partners such as yourselves that have really a Latin American focus, but also Dar Al-Khan, which does the Da Vinci Tower out in Dubai. There's a lot of interest in the Middle East and Africa for cryptocurrency payments in the real estate market. And really what we've found is that the penetration has come because it's a financial instrument that has a lot of benefits over traditional real estate investing. Sorry, Mike, did you? I think we lost Mike, but I'm going to keep going.
Yeah, you keep going. I'll try to get him back. All right.
One of the main benefits is that transaction values tend to be about 2x what they are with traditional money transfer methods. So what we see both in the real estate community and the retail community is that when people spend crypto and they have crypto to spend, they tend to spend more, about 2x. And we've got all sorts of research that we've done in consultation with Forrester and other firms that show that not only are you getting more higher transaction values, but for the most part, you're attracting new customers. You're attracting buyers and customers that wouldn't normally be, that haven't transacted with you before and are intentionally seeking you out because you participate in the crypto ecosystem. So there's a very fast and easy setup to get set up to pay with crypto payments. And one of the benefits for businesses is that we've actually taken all the volatility out of it on the business side at BitPay. So what happens is that you're able to accept payment for real estate and any sorts of goods and services in one of those 18 different cryptocurrencies, but you don't have to even touch crypto. You don't have to manage cryptocurrency wallets. You don't have to have a wallet address. You can transact completely in fiat, because what's happening is that as a cryptocurrency payment processor, we're taking on the liability of any volatility within the crypto market, but we're settling to you in fiat currency. And we have a couple of different fiat currencies that we can settle in, including USD, Euro, Mexican peso, anything in the Anglosphere, so Canadian dollars, Australian dollars, New Zealand dollars, South African rands, and we're adding more current fiat currency methods as we go forward and demand increases. But I would say the long and the short of it is a lot of people probably hear cryptocurrency. They think about the volatility of Bitcoin and these different cryptocurrencies, and they think, I don't want to get anywhere near that because it sounds interesting, but I don't want to be, left holding the bag if the cryptocurrency market contracts for some reason. And I think one of the main things, the number one thing that I would that I would want to communicate to your listeners is that you can participate in this ecosystem and take all the benefits of it, but not be exposed to the volatility, because you don't have to touch it. Let cryptocurrency payment processors like BitPay take on all that risk, and then you're settled in fiat. So a $1.2 million transaction is a $1.2 million transaction, minus cryptocurrency payment processing fees, which are traditionally lower than banking fees. Another thing I'll hit on is that all of the protections when it comes to KYC, AML, OFAC, sanctions list, all of these controls that exist on traditional banking transfers, they exist for cryptocurrency as well if you partner with the right payment processor. So we actually have an entire workflow that takes buyers through the KYC process prior to their transaction, and they can actually go through, get approved. The real estate companies and the sellers can have the same peace of mind that they have with traditional banking transfers, that you're getting the same AML, OFAC, and sanctions list protections that you would with traditional banking transfers. But with cryptocurrency, one of the benefits is you're talking about instant settlement and instant fulfillment. So really, with the exception of Bitcoin, which is the slowest of the cryptocurrencies, which can take a couple of minutes to, in some cases, just depending on how busy the network is, it can take up to a couple of hours. But you're talking about seconds. You're talking about think of how long like an ACH or a wire transfer takes, and all of the different hands that it's getting touched by as it goes through, say, a cross-border transaction. With cryptocurrency transactions, it's essentially a P2P transaction, and it's instant. So the fees are much lower. You're talking about instant fulfillment. You're opening up yourself to this huge crypto community of hundreds of millions of wallet holders. And we have seen a lot of interest in the real estate market.
Yep. And so we're back with the slide. I don't know where you were, but can you see your slides there, John?
If you could just move forward one, just to give you a workflow of what I'm talking about when it comes to what is cryptocurrency payment processing. What's happening is that the consumer is paying with crypto. The crypto is coming into one of our wallets, and then we're settling to the business in fiat. So it doesn't matter what happens to the price of crypto between the time of the transaction and the time of the fiat settlement. We're taking on all that risk. And for tax purposes and tax liability and things like that, since it's a fiat transaction, you can treat it on your books as you would any other sort of banking transaction. We next day either ACH or in some cases wire transfer those funds to the business's accounts for much lower fees than you often see, certainly with credit card processing. If you do have some listeners who accept credit card payments for large purchases, but things like ACH and wire transfer, banking transfers, these things can, depending on how many borders you're going across and how many parties and how many are being touched in the transaction, you could be looking at some pretty significant fees.
Yeah. And let me ask John, how are you, go back one slide there, Michael. How are you handling this, I guess, yeah, are you hedging? So you get the crypto in and it tanks. I mean, it's down, 8, 10%, 20%, pick a number, right? Between today and tomorrow before you send me my money. How are you managing that element of the business?
Yeah, it's a great question, Mike. And we've been doing this for a long time. So what we do have is a proprietary trading desk that's managed by one of our co-founders. And we have, a very large amount of holdings that we manage very much like a fund. So if the long and the short of it is, let's say we're taking a transaction in Bitcoin. If the price of Bitcoin is going down at that particular one point in time, we probably sell it. If the price of Bitcoin is trending up, we're probably going to hold on to it. And we're holding on to just vast sums of cryptocurrency across different coins, and that we're managing with, puts and shorts and things like that. In addition to that, like you would a regular trading desk. So, that risk we're hedging, we're managing on our own. But one of the things that I will mention on top of that is that because we're buying and selling crypto in such large amounts, we get premium access to the best exchange rates. So anytime, let's say, a buyer wants to come in and purchase a piece of real estate and the time comes for them actually to do the transaction, what we're doing is we're actually shopping out to the 5 largest global exchanges and getting the best exchange rate for the buyer at that one point in time. So they're getting a premium exchange rate.
Yep.
It's very competitive, and they're getting the best bang for their buck. It depends, no matter what cryptocurrency they want to use. There's probably only about half a dozen or so, I'd say, that people would seriously use to transact with cryptocurrency. But no matter what coin they use, we're giving them the best exchange rate. We're not marking up that cryptocurrency. We're just taking a transaction fee that's much lower than traditional banking fees.
Absolutely. No, it's one of the reasons I think we were so excited to connect with you all. You talked about taking sort of the mess out of it, right? And I think for a lot of people, it's really not very messy to do a crypto transaction. But when you're doing large crypto transactions, when you're dealing with areas where absolutely KYC, know your client, and UBO, underlying beneficial owners, I mean, all these acronyms, right? They start to play in, and they start to play in fairly large transactions, and real estate is a large dollar transaction, by definition. And so the fact that you take a lot of that mess out of it is critically important for folks like us. But I think it's also important for folks looking to make a large purchase with the crypto, because a lot of that can be handled on the front end by your organization, correct?
Correct. And there's kind of 2 sides to our business. I work mostly on the acceptance side for business to be able to accept and transact in crypto, but we also have a wallet of our own. But that's a separate part of the business. We're wallet agnostic. So we're compatible with over 100 different wallets. It doesn't matter if they have a Coinbase wallet or a MetaMask Ethereum wallet or whatever wallet they use, we can support it. And so we're compatible with however they choose to store their cryptocurrency, whether it's a custodial wallet or a non-custodial wallet. And we take a lot of the errors out of it because we've coded and tested to these individual wallets to prevent underpayments, overpayments, orphan payments, which are essentially payment errors that can happen in the blockchain ecosystem. We've taken that mess out of it. And we've also taken out a lot of the manual work that has to be done, because we wrap everything up into a very simple invoice that is centered around a QR code. So literally, we do once a week, we're doing $1 to $1.5 million real estate transactions that go through a very similar process as smaller transactions do. They pick the wallet, they pick the coin, it generates a QR code. They're able to confirm the transaction. Usually the seller has already put them through the KYC requirements, which don't take very long. We already have a process in place. It's already built for all of that. So just when you think of the normal headaches of funds transfers, crypto is much quicker.
Absolutely right, and much more efficient in many ways. So a couple of things you've touched on some of the questions I had, but let me just ask 2 of them anyway. What are some of the other use cases where cryptocurrency could prove valuable to companies and businesses? You touched on some of them, but maybe expand if you have an idea or 2 more on other use cases where crypto can really be uniquely powerful.
Yeah, it's a great question. I've talked a lot about kind of the acceptance side of it, but there's also the reverse, what we call, payouts or disbursements, where again, you may be a business that does want to transact in crypto, meaning you want to send crypto to a different division of your business overseas, or maybe you want to pay contractors, pay freelancers, pay vendors who can accept crypto. Again, we can actually facilitate that transaction in the reverse. So, you would ACH or wire us the funds, and then we would send communication to the recipient saying, how would you like these funds dispersed in your crypto wallet? And then they can pick which currency that disbursement is put in. It's the same fee structure. There's the same AML protections. And also you could say, pay your employees. So every week I take a portion of my paycheck at BitPay in Bitcoin. And then it's using actually the facilitating structure that we put in place, where you can actually pay if you have employees that you want to pay bonuses, or you want to pay rewards. A lot of companies are looking to do payouts for different type of rewards programs. So think of it as just another way to move funds around, to pay and both accept funds, but along a much quicker and cheaper ecosystem.
Yeah. Okay. No, that's good stuff. By the way, I have now received a message that John Wingate is on with us, but having some technical challenges. John, can you let us know that you can hear us, and maybe we could hear you? You look to be muted at your end. Maybe. All right. Well, I'll tell you what I'm going to do. I'm going to continue on, and let's. Well, Michael, you're going to have to kind of walk us through. I see John's on the screen, but unfortunately has not been able to. Well, he's coming on again. John?
Am I there? Am I back?
You are back, man. All right, good. Well, I'm glad. All right. Well, while you're here, let me just roll right in. I'm so glad you could make it. And just a quick introduction, and then I'll let you get to your presentation. And we have some questions, and we want to have sort of an open Q&A at the end as well. But John Wingate with BankSocial, it's a global fintech company offering the evolution of financial services and technological infrastructure on the blockchain to businesses and individuals globally. The individual is paramount. We believe that social capitalism will be the way of the new economics, evolving to support all users directly. For the first time ever, systems are open. We give this new way of finance to the world. I love that. It's a new way of finance, being able to use your crypto as collateral for loans and lending. And that is just fantastic, because I think so many of us who have crypto, we don't want to part with it. And if we can leverage it to, get some other things that we want, other investments, other assets, that's a win-win, and you're making that possible for people. So well done. I'm really happy you were able to join us, and I'm not sure you'll be able to move the slides, but Michael Fuller is here and he will do that for you. So Michael, John, take it away.
Excellent. Yeah, I mean, you kicked on all the right pieces of this. Being able to leverage is kind of, I think, one of the untapped potentials of this stuff, because who wants to sell their crypto, right? You've been stacking it for years. Who the hell wants to sell it at this point? And so, I think that's one of the backbones of DeFi, and we really started noticing this in the mining space. These guys are, they're collecting all these coins. They see the future upside potential. And who wants to sell it, right? But they've got to fund their operations. They've got to fund, upgrades of machines and the cost of electricity. And so I've been in the space since 2010, in the crypto space since 2010. Got involved very early with Bitcoin, and just have rode the evolution of it. I'm also a developer, a software engineer, an entrepreneur. And about a year and a half ago, 2 years ago, we came across, some solutions that we imagined up some solutions that fit very well, since I have some real estate. I have some, I'm a broker, done some home building as well. And we came up, I mean, really, right around the time we met you, came up with this idea, to do this kind of, keep your crypto loan where, it's asset backed, for hard money, fix and flip, new construction. We give you the ability to essentially stake your crypto, and because it's asset backed, we can offer much, much higher leverage. We've got two different forms of that. Basically, we got the asset backed and we've got the non-asset backed, non-leverage. We'll talk about both. So, when you're asset backing something, leverages are a lot higher, because you've got the asset to back it. We've also got a product that is completely unleveraged against everything except for your Bitcoin, where you'll stake your Bitcoin or one of the 22 other cryptocurrencies that we offer. There's quite a big list. I believe that's on our website. And by staking one of those two crypto or one of those 22 cryptocurrencies, we give you a loan. That loan, of course, it has a margin. It has a margin call. Unlike a day today, so today's a perfect example of a place where a margin call could happen. All of ours are done manually, meaning we work with the people who have their crypto staked with us. So there's not some automated DeFi smart contract that's going to execute a trade, and you're like, wait, I was just about to put, I just needed another 24 hours or whatever. Most of our margin calls don't happen because of the volatility of crypto. It happens on the big events where you see something like what we saw 6 months ago. Certainly, though, on something like today where you're seeing a recovery where you've got to drop, our typical margin call is around 30% of the price you staked at. And so if it falls below 30% and it hangs out there for a couple of days, we're going to be looking for contacting you, start the process, start figuring out what you want to do with it, and then give you the opportunity to either top that up, let the market recover. So on a day like today, you wouldn't even have to worry about it. You'd never get a call from us. You'd never get an email from us. You just continue going about your day. In the event of a, more of like a February, January type situation where the market falls, continues to hang out at that low level, we'd have a quick conversation just mentioning, kind of we're at that leverage rate, and then you have the opportunity to top up, or you can walk away with all the cash that we gave you, and there's no risk, in the buying a house. So if you're buying a house from ECI, there's no risk at anybody coming and taking your house. The worst case is instead of selling your crypto, you had the opportunity to keep it for as long as possible. Market crashed, and now you have a home.
Right. Yeah. And let me ask just real quick on this slide, anything on this particular slide you want to cover?
Yeah, I mean, I would say that relative to what you see in the markets generally, our terms, because I'm from the financial industry. I mean, we work very closely with credit unions as well. So we kind of have a very unique opportunity here. We believe credit unions are kind of analog DeFi. We're turning them into digital DeFi. We've got the whole Web3 and crypto space kind of understood. And so we're merging that all together, which means we can offer terms and rates that are really unmatched in anywhere in the world. Oh, if you could back up, sorry.
Oh, sorry. Yeah.
No worries. Yeah. Terms and rates that are completely unmatched. The other thing is if you're going for just a crypto leverage loan, we're not talking the traditional types of loan applications and underwritings and processing. We're talking about funding within 24 hours, sometimes less. We do the full KYC, AML, we're OFAC compliant. We've got all the same stuff that some of these other people do. And really the goal is how do we help people utilize their crypto without selling it? Because everybody wants to keep their crypto. And so, with what we have going on, really our product, and we've looked at a lot in the market, is unmatched. It just can't be touched. And that's why you brought us up here, right?
Well, and John, that's right, because we met in Miami, about a year ago, and you sent, and whatever. And we're always, people always approaching us with ideas or whatever. And one of the first things we ask for is solid paperwork. Okay, if somebody's it doesn't, whatever it is, right? Send us your paperwork. And literally the next day or same day, whatever, I think I saw it the next morning, in my inbox was your loan agreement, all the paperwork. And, and I passed it off to our attorneys and they looked at it and they said, yeah, this is the real deal. It all checks out. And you know what, that's a big deal, John, because I think, especially in the international world, the global world, there's just so much that's unregulated. And I like that. I love the freedom of working in an unregulated environment or a minimally regulated environment. But, the flip side of freedom is personal responsibility. And so, we did a very good job of checking you out. But I encourage anybody who's thinking about, getting a loan through you to put you through, very heavy due diligence process, because, just because we checked you out a year ago and you checked out doesn't mean you still check out. But obviously we like you, we love your product, and we feel very comfortable bringing you in and introducing you to folks in our network. And so just a couple quick questions. And then what I'd like to do is kind of wrap up and then kind of go to a round robin, because I think we can get some questions from some people who are, with us today. But then also kind of, play off of each other a little bit and let this conversation evolve some. But just real quick, what are some of the cryptocurrencies that you do take for the loan, for the collateral on the loan?
Yeah, so just we take your base standard ones: Bitcoin, Ethereum, Cardano. We're even taking Ripple. A lot of the stable coins we take. There's 20. It's actually 25. We went up from 22. Polkadot, Uniswap. Quite an array. I would say when you compare it to everything else that's out there, we've got the widest array of tokens for leverage that I've seen at the rates that we've seen.
Okay. And just, you touched on this a little bit, but I want to dig it one level deeper and talk about, custody, right? But, just kind of walk somebody through the process to get this loan.
Absolutely.
Right? Yeah.
Yeah. So you would come fill out an application. It's a very quick due diligence process. We do AML KYC. We have a product called Verify. It takes 5 minutes. You upload your documents. You're done. You're verified. AI, deep fake detection. We use a couple different custodial solutions out there. One is Fireblocks, another one is Anchorage. So when you're crypto staked with us, it goes into one of those institutional grade staking products, and then we show you where it's at. You know where it's at. It doesn't get rehypothecated in any way, and then it's there until you pay back your loan. We have loans out to 5 years, so you can kind of pick what you're looking for, anywhere from 12 to, try to not do as many of the 5 years. Certainly though, 2 to 4 years, very easy. Our rates are very reasonable, especially in this kind of downturn of the market where the Fed is going crazy with rates. We can be more competitive than what you're seeing out there with home loan rates. And the leverage is great. You can leverage up to 75% of your Bitcoin holdings or any of these other coins and get a very fairly hefty a sizable chunk out of those and still keep it. And so the staking model is very simple. Again, we'll give you an address that's a Fireblocks address. You'll send that to that custodial wallet and it'll hang out there until you pay back and you're ready to. We have a trustee agreement. So in the event that anything happens and we're out of the way, all this is provided, like you said, we're very much about, having everything tied off and kind of bringing this new evolution of, companies who are actually doing things the way that they should be done, bridging the traditional paradigm with the future paradigm. And so, everything is done with tons of legal guidance. Compliance is always a top priority. We believe in openness and we believe in, kind of self-custody and all those factors. We also believe that there's markets for a lot of different things. And so the trustee is a super important part, where if we go away in a couple of years and we're not here, you still have a trustee who steps into place to ensure that the custodial and that trusteeship exists both with us and with Fireblocks. Is one of the first things we did when we talked to Fireblocks was we said, we need to make sure that you guys have a trustee in place. And just like you did your due diligence, we did our due diligence on everybody in our ecosystems to ensure that in the event that something happens, everybody's covered.
Yep. Yeah, excellent, John. One quick question, then we'll wrap up on my end. But Bitcoin's whatever, 18.5, 19. Let's say you borrow, you have it, and 6 months from now, Bitcoin's at 40 again, and you've doubled. Any prepayment penalties if someone wants to just liquidate out at that point?
There's no prepayment penalty. There's a set amount of interest that has to be paid through the loan. Certainly there are early payoff opportunities, and they're spelled out in our agreement. And then also there's the ability to kind of pay off and stake. So we have some other opportunities that have staking combined with those. Those are interesting opportunities, little less leverage. But in those opportunities, in the stake opportunities, you can stake, earn some interest, a little less leverage. And then, if the Bitcoin goes back up, you can pay off your loan, get out of it, and be done with it.
Yep. Right. And I think that's what we're all kind of imagining, that we're seeing a bottoming of Bitcoin and some of the others as well. But, if we can leverage and borrow now, and Bitcoin starts to climb back up, obviously that lets us pay off those loans with free money. Right. So, yeah.
Yeah, and you own an ECI home. So you have $40,000 worth of Bitcoin back in your hand, and you own an ECI home, or two of them.
Right.
Cool ones.
You got it. Well, and that's a nice segue. Let me just kind of jump in real quick and wrap up, because I want to get to the point where we can kick in. I know some questions from some folks listening, and I want to make sure we get to those. But just really quick, our company works in several countries, at 7 countries right now. Nicaragua's one of the countries that we work in. It's a beautiful, beautiful country. It's easy to get to, 2.5 hours from Houston, 2 hours from Miami, but just a great, great place. The ecosystem there is phenomenal. You've got everything from dry, semi-arid coast like Southern California. You've got mountains, coffee plantations, rainforests, very, very affordable. I lived there for 14 years, and it was tremendous. Our Grand Pacifica community there, we've got a neighborhood of tiny homes off the grid. These are all solar homes. It's a beautiful community, resort community, 2,500 acres, 3.5 miles of beach. But I think one of the things that's gotten people really, really excited about it is the fact that we have been able to build a community for digital nomads, the remote revolution, people who are now able to, or they've always been able to, but have been given permission by their bosses, by their companies, right? Or just the ability to not be tied to any one location, be able to move overseas, and this has been an incredibly strong market for us. Before you came on, John, we were talking about 44 out of the 200 homes at Grand Pacifica were purchased by folks with crypto. So about 25% of the homes, and price points from $120,000 to $169,000. Ocean view homes, about 100 yards, 150 yards from the Pacific Ocean. I'm not going to spend any time on the floor plans. These are beautiful, cute little homes, indoor space, rooftop terraces, solar panels on the roof itself, and in 1 and 2 bedroom models. But again, creating, this is the master plan, but creating a beautiful community. And there they are. You can see the solar panels on the top. You can see you're 150 yards from the Pacific Ocean, one of the best surf breaks in all of Central America, just about a half a mile to the left, a beautiful beach break right out in front, beachfront homes starting at $400,000. Again, some beautiful floor plans here, but if you want more information, we'd love to hear from you. But again, this is incredible right here. Oceanfront homes on the Pacific Ocean, $400,000, 80 of them under construction. Ocean view homes, 150 yards from the Pacific Ocean, starting at $120,000. All of these are sold. We build to order. If you're interested in owning one of the remaining homes in either the oceanfront phase or the Ava phase, I think there's about 11 in the oceanfront and 23 or 24 in the Ava phase. Please let us know. About 44 of these homes are owned with crypto. So great opportunity. I mentioned at the beginning, teak. Teak is an incredible asset class, much like crypto. It's an asset class that's really been ignored by the vast majority of investors. Teak timber generally, but teak specifically. I planted my very first teak plantation in Panama in 1999. It's a 25-year cash flow cycle. The trees are now 22, 23 years old. We'll be harvesting them in another 2-3 years. So this is an incredible asset class. It's a very, very inexpensive entry point, under $7,000 for a quarter acre, turns into about $100,000 during the growth cycle. Teenage teak at about 20,000 to about 110 over about a 9-year period. So different cycles for different types of investors. But one of our largest investments by Bitcoin, in this case crypto, but Bitcoin, was a $3 million purchase of teak. So again, this has been an extremely popular investment with folks in the crypto space. Because again, it's an ignored asset. It's not something that people pay a whole lot of attention to, but the upside in teak is phenomenal. It's an asset that's being harvested 8 to 10 times faster than it's being replanted. Supply and demand just simply is a factor, sort of like the Bitcoin. It has a finite maximum. While there's no finite maximum to the amount of teak that can be planted, the fact of the matter is that it's being harvested 8 times faster than it's being replanted. So you have this supply and demand imbalance that's happening right now. Some great bundles. If you're interested in owning teak, reach out. We'll tell you what those bundles are, but some great investment opportunities. Belize is the one country that we love. I started my very first business there 29 years ago. We started our development company 26 years ago. The island of Ambergris Caye is an incredible scuba diving, snorkeling, fishing destination. It's an incredible family destination. Easy access again. The island of Ambergris Caye is actually a Caribbean island. It's off the coast of Belize. And it has a reef system that runs the entire length of the island. Incredible snorkeling, diving, fishing. We are in the process of building a Marriott resort right now. One of the nice things about this is it qualifies you for a residency. Ownership of one of these residences, they are whole ownership. I want to make that point. These are whole ownership. You own it. You have title to it. It's yours. And ownership of these residences qualify you for a residency in Belize, something that, again, a lot of folks in the crypto space have taken advantage of. We are keeping a vast majority of them. We've got a limited number of these residences for private ownership. They start right around $320,000 in fiat or crypto. So that's your choice. But again, some great floor plans, some beautiful 1- and 2-bedroom floor plans. Some incredible penthouse 5th floor overlooking the reef system. This picture is taken from across the street a few weeks ago during the initial phases of construction. You come down in January, you're going to see rebar and concrete coming up out of the ground. So love to have you come see us. If you want to have any information sent to you about any of the products today, the ECI products, the teak investment, the homes in Grand Pacifica on the Pacific Ocean, the Belize homes at the Marriott, hit that QR code right there and we'll send them to you. But what I'd like to do now is ask Michael Fuller if you can rejoin the call. I'd like for you to look at some of the questions that have come in. I know we saved a couple questions as well and get this conversation started. And John, both Johns, John and John, you guys are both real professionals in this space, and I would love to have some dynamic interaction between the two of you as well, please. So let's see what we have for questions. But Michael Fuller, if you want to kick off that one question that we had, that would be great.
Absolutely. So this question is for John Morrison. Question is, what are we to make of the recent downward trend in the crypto market, and what does the future look like?
Yeah, that's a great question. Thank you, Michael. I think that for the most part, Bitcoin and these other cryptocurrencies are often looked at as speculative assets, and it's an asset class that is liable to market forces just like anything else. And I think if you watch the price of Bitcoin, all the other cryptos tend to follow Bitcoin, and as I understand it. and it often follows pretty closely the S&P 500 index. And it really has not decoupled from that yet. And most of the large precipitous drops in the value of these different coins and tokens has largely kind of it trended pretty closely with the market. I think at some point you are going to see a decoupling of the crypto asset classes from the more traditional market assets. I don't think that's happened yet, but I think at some point, you're going to see crypto kind of be its own, its own class with its own, specific variables of market forces that really decoupled from like the Dow and the S&P 500. I don't know how far off that is, but what I would say that if you're looking at investing in crypto and potentially accepting cryptocurrency, back to John Wingate's point too, a lot of these people have been holding on to crypto for years and many years. And so most of the people that are going to get into a digital asset are also the same types of people who are going to get into real estate or even teak investments, these long-term investments that, you're not in Bitcoin as an asset class because you're looking to get rich over the course of a year. You're in it for what the price of Bitcoin is going to be 10 to 20 years from now, not a year from now. So I kind of take a very, very long-term view of it, rather than looking at kind of the peaks and valleys of crypto, which you're right, it's very volatile, and BitPay and some other companies have some mechanisms for businesses to insulate themselves from that. But just for personal investors, anybody who's going to be paying in crypto has likely been in it for a while and is spending and investing gains.
Yeah, thank you, John. That's
Yeah.
like the answer. John Wingate, yes. Some thoughts on that?
Yeah, absolutely. Yeah, absolutely. So I just got off a Twitter space. We were covering almost the exact same thing. So, just like the .com bubble of the, 2000, the app crash. So there's going to be, plateaus and then evolutions. And because of what DLT is, distributed ledger technology, because of what it is, you're really going to have this happen multiple times, probably over the next several decades, where we have this run up, we have this plateau, this evolution happens, and it happens, it shoots up again. And so what you're really looking at here is a paradigm shift, an evolution of the way data is moved and shared between entities, whether that be people, whether that be companies, whether that be some hybrid of those things or some combination, kind of the way DeFi works. So when you think about this, when you're looking at it, that's why keeping the crypto is really so important, because, to look at this as like one crash and then it's just going to fly up again and then, okay, that's it, we made it. That's not historically how markets work. I mean, when 2000, if you look at what, like the evolution of the internet happened, it was a bunch of small things happening. And then you had the 2000 crash, and then that destabilized a lot of industries. And then the App Store came out, and look at what Uber and Airbnb and a number of other companies did. They obliterated others. So that similar type of thing is going to happen, and it's going to continue to happen probably over the next 4 decades, possibly that long. And then, we'll most likely switch out to some other type of evolutionary product or design implementation that kind of comes and sweeps us off of our feet for the next round. So that's my thoughts on the whole markets. I try not to measure it in terms of, like this is a comparison to the S&P and it's going to break out and it's going to break out in cycles, because really these are just, it's new ways to share data, new ways to interact with each other, and really finance makes the most sense, because so much of what we do is backed by us paying for things or us doing things for money. And so that's why we tend to think of it financially. It's really deeper than that, though.
Yeah, thank you. And one of the things I mentioned earlier that I was in Prague speaking at the Free Cities Foundation, and there you've got the sort of the melding of both this free city concept, Prospero in Honduras, and some of the other Zetis, where you're starting to get some true free city concepts being implemented. And then overlaying that the crypto element, right? Because they really do go so well together. The challenge, I think, is from a nation state standpoint, the sovereignty issue, right? I mean, this idea that now there's money that doesn't belong to any country, I think that's gonna continue to be challenged by the sovereigns. But then there's also, I would say, the business entrenched interest as more and more things can be done better on the blockchain. So many things can be done better on the blockchain, but you've got these large business institutions that really, are wanting sand in the gears, right? And probably throwing some sand in the gears. I'd like to just have you guys prognosticate just for a minute about, either one of those or both, some of the challenges that crypto is going to face, because you're right. I think it's going to be a, a mountain. We're going to run up. It's going to plateau. We're going to have the ups and downs. But ultimately, these are assets that should do well. Nobody knows the future, but for so many reasons they should. But there are challenges to this ascension. And I'd just like to get both of your thoughts on what you see some of those challenges being, and what the way around, through, over, under, is likely to be as well.
Yeah, I'll take it first. So really, with the sovereign, you got to look back at the history of kind of humanity. And I talked to a guy whose name is Lamont Black. And Lamont Black's the former chief economist for the Fed. And, we both very clearly align on this, that money has been different throughout the evolution of human history. And so, just recently, the most recent VPEG to kind of fiat is the most recent version of money. Before that, you had gold. And so really, I think what we're just seeing is certainly sovereigns don't want to let go of this, which is why they went to fiat when they were back on gold. But if you look at what was happening with Gaddafi in parts of the Middle East, where they were trying to go back to the gold-backed standard, I think this is the evolution of the gold-backed standard, finding something that the majority of sovereigns can agree on and find value in, and then find less friction. We talk about quantum physics, and we never get frictionless. We certainly can get a lot less friction, order of magnitude less friction. And so when you look at this from the perspective of, the history of human evolution, I think we're not going to see something that we haven't done before. We're going to see a revolution. This is more of a revolution on the sovereign side, back to something that has to have more universal value, like a gold, right? That was such a long time value. And we're seeing that fiats don't really work because of the problems that they create when they overprint and they destabilize the monetary system. And so I think we're just going to see a restabilization back to something that's more universally accepted by sovereigns.
Interesting, John. Thank you. John Morrison, final thoughts? We'll wrap up after you predict the future for us.
No easy task, but I would say, let me just share some things that I don't think it's going to have a problem, that are not going to be a problem.
Okay.
Number one would be adoption. I really do think that what we're seeing on our side in the crypto payment processing is that even with the market downturn, there is a huge amount of interest from very, very large, very popular companies. The adoption of crypto with the I'd say the 25 to 55 demographic is huge.
Mm-hmm.
People are continuing to buy crypto. They're continuing to spend it. They're continuing to spend gains. And also, I think the recent market downturn has actually been seen as an opportunity for a lot of people to go ahead and buy in. If crypto had gotten up to whatever it was, 60,000 last year, and kept going, I think a lot of people would have thought, well, I kind of missed the boat. But having it, crash down like it often does, it's done this 3 or 4 times before. I think a lot of people are looking at this as a buying opportunity. And I think the challenge is going to be, how do you marry the two strengths of blockchain payments, which is, the privacy, but also the speed. And so you have obviously the Biden administration coming out and endorsing research into a central bank digital coin. But that CBDC is going to have a lot of controls on it. Whereas, if you look at a lot of the Bitcoin and crypto ecosystem, you have people concerned with privacy and, how it very much mirrors like a P2P payment with no intermediary or controls in between. And when we think about what we do at BitPay with compliance and all the KYC and some of the traditional banking controls that we put on this ecosystem, I think we're going to have to figure out like what's the sweet spot between, the total anonymity or the privacy, the P2P decentralized aspect of it, and then the more controlled aspect of it, like you said, the sovereigns coming in and maybe not managing it, but very much controlling the individual transactions and tax liabilities and all of that. So I think kind of finding that middle ground is going to be the challenge that governments and people are going to have to find really a middle ground.
Yeah.
And Mike, I like to add an additional comment there, just some silver lining here that we know about. So we've been very involved with the NCUA, FinCEN, FINRA, FDIC as of late in the past 6 months, and have had several discussions with those entities about specifically crafting guidance based on existing legislation. And there are 3 major things that they're trying to tackle. The first one, I believe the most critical, and we've been at very high level tables talking to the vice chairs and the chairs of these entities. And what we've identified is that the digital ID, so if you notice recently, W3C, the World Wide Web Consortium, just came out with their guidance, the payload specification for what a distributed decentralized identifier needs to look like. And if you notice, companies like MasterCard, Visa, what are they starting to get into? Identity, digital identity, because they know the payments part of this is going away. It's very quickly going to be rendered useless by these frictionless or low friction systems that are peer-to-peer, right? What's going to be missing is the digital identity, right? The distributed, the self-sovereign. So think about it where you walk into a gas station or a liquor store, and the person just needs to know if you're over 18. And that's really the only question you need to be answered. And you just need to make sure that the identity is verified through cryptography. And there's really been no better way than cryptography to do that verification. And so we are actively in the final stages, I'll say this, of getting this digital ID, distributed digital ID guidance, which I think is, a lot of people focus on the legislators and the politicians. They're really the wrong people to go after, because even after guidance or legislation is passed, the person who is regulating is the regulator. It's FINRA, it's FinCEN, it's the SEC, and those are the people who really need to be attacked first, because even when it comes out, when new legislation, so we're very close on the digital ID, very close on stable coins. I think you're about to see something come out of the House Financial Service Committee that touches on that is actually legislation for stable coins, which we have helped craft and we believe in. And so there's a lot of silver linings here. The CBDC argument, it's really, is the FDIC already digital? Yes. Can they already track it for the most part? Yes. This will just make the bank to bank and the big Fed movements a lot more simple. So the CBDC is I don't believe it's intended to be, and I don't think there would be adoption on a CBDC that was for use by the public. And so the fact that the House Financial Service Committee is coming out with a stablecoin bill lends even more credibility to the fact that they probably won't come up with a public use CBDC, and that they will allow the markets to come up with their own ways to provide payments, just provided that they follow rules and that they're not, Terra Luna stablecoin that's just some crazy, algorithmic thing going on. So very, very much a silver lining, and I'm very happy to be a part of it and help craft this future.
Good. And I think that this kind of information is exactly the kind of information that we love to have on Conversations with Cobb. And I would also invite both of y'all to come back first of the year, Q1. I'll be starting a formal podcast, and I would love to have both of you guys come on and be a guest, and we'll kind of pick up where we left off, and we'll see how these predictions of the future have carried off for the beginning of Q1. So gentlemen, thank you very much. And just so everybody knows, if you weren't on the call, you will be getting a copy of the recording. So John, again, thank you guys very much, and look forward to having you guys back for another conversation in the future.
Thanks, Mike.
All right.
Thanks, Mike.
Take care, everybody.